It has been about a month since I first started investing in cryptocurrency in late 2017. I wanted to do this video update on all the things I've learned in the first month of investing in cryptocurrency because I have learned a huge amount going from complete crypto newbie, knowing nothing about Bitcoin or blockchain technology to what I know today, which is still not a lot, but it's a lot more than I did know back then. I want to share this as my personal journey and reference point, and I figured some other people might find this interesting as well. Hey, I'm Ryan from tryingcrypto.com, making crypto easy, and I like to share videos like this about my personal journey, as well as educate people on different areas of the crypto space because it gets so confusing out there. And so I feel like if I can understand something and explain it in an easy to understand way for people, that's going to be helpful to a lot of people out there. So I'm excited to do that on this channel. This is a little bit different from that. This is me talking about my journey, talking about the things that I learned. It's less to educate you and more just to document my personal journey. But if you're just getting started in the crypto investing space, then it could be very useful to you. So I'm going to go down the list. I've written a bunch of things here on my notepad about some of the things that I've learned in the first month of investing in cryptocurrency. The first thing is I learned how to actually buy cryptocurrency. I had no idea how to exchange Australian dollars or fiat currency for cryptocurrency. And so I quickly learned how to do that. I quickly learned about Coinbase, which is the major exchange out there and by far the easiest one to use. I'll leave my link to that in the description down below. I found out about that, but then they gave me a hard limit of $250 per week that I could spend. And because I wanted to invest more money than that, thousands of dollars into cryptocurrency, $250 a week wasn't going to cut it. So I learned about other websites and other services out there where you can exchange them. I learned about the fees and all of that sort of stuff. So that was really my first thing that I learned about. How much fees do they charge? Do they charge a premium on the exchange rate? So Coinbase might have a cheaper price for Bitcoin compared to Independent Reserve, which is another one that I use. But then they've got fees, so you've got to take all that into account. So I learned about buying crypto with fiat currency, and frankly, that's pretty easy to understand. Only took me a couple of days to understand that. That's not the big thing. Next, I learned what the blockchain technology is. So I got into cryptocurrency investing like a lot of people, saw the huge growth trends that were happening with this, did the math and said if I invested in Ethereum in early 2017, how much money would I have today? And it was a mind-boggling amount. And so yeah, I saw that like everyone else did and thought, okay, this is something that I want to dabble in. This is something that I want to try. If there's opportunity here, I want to see if I can take advantage of that opportunity. So I got into it looking at that, but quickly realized that I know nothing about Bitcoin. I know nothing about blockchain. I know nothing about Ethereum or dApps or anything like that. And I don't like putting my money into something that I don't understand. So as soon as I put some money into cryptocurrency, I'm like, okay, I better quickly try and understand this. And so then went on a whole journey, and I'm still going on that journey of trying to understand exactly how blockchain technology works. The way that I learn things is different to a lot of people. I kind of need to understand every single intricate detail about something in order to understand it. So when people talk about the very basics of blockchain, that's not enough for me to really get my head around it. So I need to get into the nitty-gritty of the SHA-256 algorithms and all of that sort of stuff, and how one block connects to another and how that affects the hash output. What is hash? All of this sort of stuff. So I've been learning so much, watching YouTube videos about what is SHA-256, how does that work, what is hash rates, all of this sort of stuff. So learning all about that sort of stuff, which has been really fun. And I will be starting a podcast shortly. Once I really feel like I have my head wrapped around it and can understand it, I'm going to start a podcast to explain it more simply to people, because I feel like the videos and things out there don't really do it justice, and I'm still struggling to understand it. And generally, I feel like I have a pretty good grasp of these sorts of things. So that was a big journey for me, what blockchain technology is. At the moment, I'm focusing on Bitcoin. It seems to be the simplest of them. So Ethereum has complexities on top of Bitcoin that I haven't even tried to understand yet. just trying to understand the basics of Bitcoin first. That'll probably take me another couple of months. Next thing that I learned is that hot tips come with a lot of risks. So as I mentioned, I got into this seeing the growth and thinking, oh, there's these huge opportunities, and was talking to a few friends and they were saying, think about this coin, look into this coin's going to go to the moon, as they all say. So I was either listening to friends or I was stumbled upon some YouTube videos where they're talking about coins that are going to the moon. And I just thought, this is a sure thing. I'm going to put my money into these coins. And luckily, I didn't put all my money into these coins, because shortly after getting these tips, a lot of these coins went down in value. In fact, as I started investing, I didn't invest at the tippy top of the market. It did come down, but I did invest quite high compared to where the market is now, approximately a month later. And a lot of these altcoins have really gone down the drain and have really lost a lot of value. So I took hot tips, not really knowing what I was doing and just thinking it was a sure thing, and learned very quickly that hot tips come with a lot of risk. I know that sounds super obvious, like of course they do, but I wasn't really thinking that at the time. So now I'm a lot more educated. People give me hot tips every single day. There's YouTube videos coming out every single day with the next hot altcoin, and I am definitely a lot more immune to those now. I more have a strategic focus of what I want to invest in and what I think will grow. So hot tips come with hot risk, or a lot of risk, is something that I learned. I also learned that pump and dump is a thing. I had no idea what a pump and dump was. So pump and dump, apparently this is regulated in the stock market, and you're not allowed to do this in the stock market, but it's not regulated in cryptocurrency. And so what people can do, they call them whales. These are people or companies with a lot of money behind them. They will go into a coin. It can be a crappy coin. It can be a regular coin. And what they'll do is they'll start buying it really low, and the price will start to go up. And so they create this price increase of this coin. Then the general market will see this coin, see that it's going up in value, think it has a lot of potential, and the market will start buying into this coin. And so what happens, this coin goes from a pretty straight line being worth nothing to all of a sudden having these huge spikes where they're growing in value. Everyone's jumping in on this coin because they don't want to miss out on the growth. And then as it's going up in value, these whales are starting to sell out, and then they sell out at the top. And then the price just plummets and just drops. And whoever bought at the top are left holding a coin that's worth half or even less than half of what they paid for it. So I learned that pump and dump are a thing, that these coins can have huge growth. And especially when you're talking market caps of these coins just in the millions of dollars, someone could easily come in with $5 million and just pump and dump a small coin. Even larger coins where you're talking billions of dollars, someone could come in with $500 million and could pump and dump that coin. So there's huge opportunity for pump and dump in a lot of these coins, and I didn't know that existed. And so I bought coins at the top that were pump and dump. Luckily, I didn't put a lot into it. I was really experimenting with small amounts of money, which I think is one of the graces that saved me in the first month, is that I wasn't going all in on altcoin number 222. I was putting a little bit in, maybe $50 or something, or $100 into these altcoins. And so when I did lose money, I didn't lose a lot. I didn't put my whole portfolio into it. So I learned that pump and dump is a thing. I also learned about selling at the tips and buying at the dips. So when the coins halve in value, like Bitcoin has recently, that's the time to buy. When it's shooting up to the sky, not necessarily the time to buy. And I also learned that there's really risks and rewards. So often people buy in when it's shooting up because they don't want to miss out. But buying in as it's shooting up, sure, you could get extra growth, but you're taking extra risk there as well. And so there's risk and reward decisions that you need to make. So you don't necessarily need to buy as it goes up. You can always buy when it comes down. And so I don't know how to explain this really well, but sometimes there are missed opportunities, but you need to leave those opportunities alone because you want to buy in the dips. So let's say Bitcoin was going up, it was hitting $5,000 and going up, but you think that might be the tippy top. You hold off and don't invest in Bitcoin. Okay, it shoots from 5 up to 20. You missed out on Forexing your money, but then it drops back down to 10. Well, once it drops back down to 10 and you think that that is the dip, that is the bottom, you can then invest in 10. So you could have invested at 5 as it was shooting up and you would have made more money, but there was more risk doing it at 5 because you thought it could have corrected from 5 down to 2.5. Whereas once it's gone up to 20, corrected down to 10, you think it's in a dip, then there could be less risk, or at least if you do your research and you think that. So even though it's more expensive and you are paying more than you would have paid at 5, the risk profile could be smaller. And so I learned about that and really analyzing the coins and the positions that you want to invest in and the risk that you're willing to take. I also learned that I completely suck at day trading. I'm too emotional to day trade. I find it too hard to sell out when I'm not making a significant gain. So if I day trade and it goes up 10% and I've invested $1,000 and I'm going to make $100, I'm like, well, $100, that's not that much money. I can't be bothered selling out at $100. I'll wait till it doubles in value and I make $1,000. Then it's worthwhile. But then it'll go from that 100 and it'll drop back down, and now I'm minus 200 from the 1,000. And so I learned that I'm not very good at day trading. I'm not really going to try and day trade. I will try a little bit with smaller coins and investing smaller amounts of money. And I'll get to that when I talk about risk versus reward. But I will do it a bit because it is pretty fun and it is a really interesting thing to learn. But looking at graphs, understanding these trends is not something I'm really interested in. What I'm really interested in is learning about the underlying technology of these cryptocurrencies and the blockchain. So really learning about that, becoming a bit of an expert in the space. Not an expert, I'm not a programmer or anything like that, but becoming good enough that I can explain it to other people, understand the underlying technology, project forward how I think it could change society, what it could potentially be worth, and then invest based on my own knowledge and research. So that's where I want to get to, rather than becoming a day trader where I'm analyzing graphs on a screen and wondering what that means and thinking it means this and doing that. So I'm not really interested in day trading. I am interested in long-term investing, but I will be doing some day trading with some smaller coins. So not buying them and selling them within the hour or anything like that, but buying them if they go up over a couple of days, then I could sell out to invest in another coin or to wait for the dip sort of thing. I also learned how to analyze and keep track of my trades. So that's pretty easy when you're simply purchasing from fiat currency into cryptocurrency. So if I'm buying Bitcoin with Australian dollars, I can see, okay, I bought it at this price of $10,000 per Bitcoin. I can understand that. It gets confusing when you start going into altcoins and you're trading altcoins. So you're trading Tron for Ethereum and you're looking at those prices there. So you've got Tron and how much it's worth on a dollar value, so US dollars or Australian dollars, but then you've got how much Tron you can buy per Ethereum or how much Tron you can buy per Bitcoin. And those are separate values as well, because Bitcoin and Ethereum fluctuate. So then how much Tron you can buy based on Bitcoin and Ethereum as they're fluctuating changes every single day. So I learned how to track that. And at the moment, my focus is not, for the altcoins at least, not on US dollars. So I'm kind of comparing them either to Bitcoin or Ethereum, whatever I'm trading in at the time. And basically, when I'm doing those altcoin trades, I want to grow my Ethereum or I want to grow my Bitcoin volume. So if I'm trading my Bitcoin for Tron, for example, because Tron's quite low at the moment and I think that it could go up, let's say I do that, Tron goes up, I'm then selling back into Bitcoin and I've grown my Bitcoin portfolio or the amount of Bitcoin that I own. So I'm focused on doing that with the altcoins. I believe in Bitcoin and Ethereum long term. So I'm happy to really just focus on how it compares to Bitcoin, not necessarily how it compares to the US dollar amount. And so I've learned to do my trading that way. And that may prove completely wrong. I may come back in a month or 2 months or 3 months and say, I've just stuffed up. So I'm not advising that anyone do this at all. But that's the only way that I was able to simplify it for myself to understand where I'm at. I want to hold Bitcoin. I want to hold Ethereum long term. And so trading within altcoins to Bitcoin and Ethereum makes sense for me, because if I can grow my Bitcoin stake or my Ethereum stake over time. That's something that I want to do long term. So I learned how to analyze and keep track of my trades. I learned what a hardware wallet is. In fact, I just received my first hardware wallet, which is a Trezor. I've also got a Nano S on the way, a Nano S Ledger, I think they're called, or a Ledger Nano S. So they're the two most popular ones. So I'll leave links to those down in the description below if you're interested in getting a hardware wallet. But this is how you can store your Bitcoin and Ethereum and other altcoins more securely. So I'm going to go ahead and set that up, get my money off the exchanges where they're vulnerable to attacks, and get it more secure. So that's really exciting. They're not cheap. Oh, excuse me. They're not cheap, but I do think it'll be worth it, because if I'm spending $100 or a couple $100 on these versus losing thousands of dollars in exchanges if they ever get hacked, that's totally worth it to me. You can obviously store them on paper, but then there's risks associated with that as well. I also learned that liquidity can be an issue when the market's going down. So the way I thought about it when I started investing was, I'm going to invest a decent amount of money. It's money that I can afford to lose. So I can still afford to get by. I can still afford to live without any of this money. So if that all goes to zero, I can still afford to live. But I did have in the back of my mind, if we have a big expense, then it's cool because Bitcoin and cryptocurrencies are really liquid. I can just turn that asset, turn that cryptocurrency back into fiat currency, back into Australian dollars. But then what happened was the market crashed. And so I had invested a certain amount of money, and that had now dropped in value. And if I go back into fiat currency now, I'd be losing money in terms of Australian dollars. And that's not something I want to do. I want to hold. I want to stay in the market. And so now I don't really want to pull out. I feel like if I had have invested and that money went up in value, I'd be happy to pull a percentage out of that, because that feels like profits. Whereas when it goes down, I'm not so happy to pull that money out. So you just need to be really careful. I was glad that I didn't invest more than I could afford to lose, because at the moment, even though it's not, I kind of feel like that money's locked up. So luckily, I don't need to access any of that, and hopefully it will go up over time. Hopefully the market will bounce back. But if it doesn't, that's fine. But if I had to put any more money in, then I would have been at risk of needing that money and having to pull it out at a loss. So that's something that I learned over the last month that could be useful to someone else. The last thing I'm going to touch on is how I'm looking at risk reward at the moment. And I know that this will change over time, and I know the way that I'm looking at it isn't correct at the moment, but I feel like it's a hell of a lot better than when I was just jumping on these hot coins that people were recommending to me. YouTubers were recommending. Don't worry, I didn't invest in BitConnect. I saw that Ponzi scheme way off. But I learned hot coins, hot tips, not so hot. So I now have my own risk reward strategy. And so I have certain coins that I've looked at and done some research in, and I have in my mind a projection of where I think they could go in the next year. And so the way that I'm looking at risk reward is, okay, firstly, I need to be happy to lose all of this money. All of it, absolutely every single dollar, any amount of money I invest, I can lose and I can still afford to live my life. It would suck to lose it, of course. I don't want to lose it, but I have to be in a financial position where if I lost that money, it would be okay. I'm not going to put my life savings into this. It's just too high risk. People lost their life savings in BitConnect. It's really sad, and I don't want to be one of those people. So I would rather be more conservative. And so first thing I look at is, okay, I'm investing a certain amount of money into a certain coin. I need to be happy to lose all of that money. And the more obscure coins you go into, so when you're investing in altcoins, the risk of losing all of that money becomes higher. Whereas investing in Bitcoin, the risk of losing all of that is smaller. But the smaller the coin, the higher the risk. So I look at how likely am I to lose all of my money in this and be happy to lose all of my money in this. So I look at a coin, I say, okay, how much do I think that coin's going to grow? How much am I willing to lose if it doesn't work out? So I'll think about that. I'll think about, okay, I'm willing to lose X amount of dollars on this coin. And then I think about the potential upside as well. I think maybe this coin will 10x over the course of a year, or it'll 2x or 3x, or grow 50% or 100x, you know. And then I have to weigh up the risk versus reward. So how much am I willing to put in? How much am I willing to lose? As well as how much upside would I be happy with? And so those two things need to balance out, because obviously you want as much potential upside as possible. If you invest $1 million into a coin and it goes up 100x, then you've turned that 1 million into 100 million. If you only put in $1, then you turn that $1 into $100. It's not the same. But then you've got, well, you could lose $1 million versus you could lose $1. So it's about like trying to find the balancing act between those two. How much am I willing to lose? Plus what potential upside would I be happy with? So let's say I invest $1,000 into something and I can see potentially that it might 10x over the course of the year. Will I be happy with $10,000 at the end of the year? Or will I have wished that I put more money in, put 2,000 in or more? Do you understand what I'm saying? Hopefully you understand. So I kind of weigh those two things up. How much am I willing to risk, as well as what potential upside would I be happy with? If I invest 1,000 and it turns to 10,000, will I be happy with that, knowing what I know now as I'm making this investment decision? And if I say, yep, I'm willing to risk that money, but I'd also be happy with just 10 grand. So I don't need to invest 2,000 to earn 20,000. I'm happy to invest 1,000 and just earn 10,000. So my upside's not as high, but I'll be happy with whatever upside I get. And if it goes to the moon and goes 100x, you know, or 1,000x, would I be happy with that? $1,000, if it went 1,000x, would become 100,000. Would I be happy with that? And so I weigh those things up, and that's kind of how I'm making my decisions at the moment. So that may be right or it may be wrong. I'm not completely sure. But I thought that would be interesting to share and interesting to see how that changes over time. So there you have it, a bunch of things that I learned from my first month investing in cryptocurrency. I am head down, bum up, learning as much as I can about this technology and what's out there. So I expect to learn a great deal more in the upcoming months, and I'll share those with you guys on this channel as well. Don't forget to like and subscribe to the channel if you liked this video. So please give us a thumbs up, that really helps, and subscribe to the channel. I'm doing tutorials all the time on everything to do with cryptocurrency, from how to buy it. I did some tutorials on Bitcoin and crypto faucets where you get small amounts of free cryptocurrency. So I've done tutorials on how they work. I do tutorials on blockchain technology and how that works. I do so many different tutorials. So if you like this sort of content, go ahead and subscribe. And while you're here, why not go and check out one of my other videos? I got a couple of videos here that I did for you guys. I'm gonna let YouTube randomly select them. I'm not gonna lie, but they'll select videos that I've done that they'll think you like. So go ahead and check those out. And until next time, best of luck out there.